Hey everybody, October is going to be a pretty active month in the stock market for me. At least I'm anticipating that it will be. Every month I publish a video with all the stocks that I'm buying. Usually it's a few. I add to a couple positions. Sometimes I open a new one. In October, I am going to be buying quite a few stocks, and I'm going to tell you exactly what they are in just a minute. Before we dive in, please take a minute and check out fool.com/Frankel. Get the top 10 stocks to buy right now. You can get some great ideas from the Motley Fool. They're my sponsor. It's the best way to support this work I'm doing on YouTube. Again, fool.com/Frankel. So I want to share my screen really quick. Okay, so there are 11 of them altogether. As I mentioned, October is an unusually large investment round for me, and there are two big reasons for that. One, I sold much of a rather large position in my portfolio, Iron Mountain. IRM is the ticker. I'm going to do a separate video on that explaining why I did that. The short version, it's mainly just the position got too big. I bought it a long time ago. My cost basis was small. It's really done really well lately. And I made a large retirement account contribution. I invest in retirement through a SEP IRA, and I made a pretty big contribution to that account during the quarter or during the past few weeks. So I'm adding to 9 of my current stock positions. I have about 40 stocks in my portfolio at any given time. Some are larger positions, some are smaller. I'll make a note of which is which are small positions I'm adding to. And I am starting 2 new stock positions that I'm kind of excited about. So let's get started. One, I am adding to General Motors. Probably won't come as a surprise to people who listen to me regularly. Ticker symbol is GM. About small dividend yield. The real reason is this is an extremely cheap stock, and the electric vehicle rollout is actually progressing much better than peers. The autonomous vehicle potential from the Cruise division has pretty much been written off by investors, and I think that's a mistake. A lot to like about this company. They're executing very, very well. So I'm planning to add a little bit to that. Number 2, and I haven't added to this one in a long time. This is Block, formerly known as Square. Ticker symbol is still the same, SQ. Um, it's at a $41.5 billion valuation. And just to put that in perspective, they paid $29 billion for Afterpay a few years ago. At that time, Block was worth close to 150, $160 billion. It's trading for less than 17 times forward earnings, which is the lowest valuation I've ever seen for this stock. It still trades very far from the highs. Management's doing a good job of really focusing on the core competencies of the business and focusing on efficiency and monetization and things like that. I like what I'm seeing from the company, so I'm going to add to my position. Again, I haven't done that in a long time. They definitely overpaid for Afterpay, by the way. But lately, the progress has been good. Number 3, and another one that probably won't be a big surprise, is PayPal. I first bought PayPal less than a year ago, and I've been building my position in it. Ticker symbol PYPL, about an $80 billion market cap, 17 times forward earnings. It's got a lot of cash on the balance sheet. If you back out cash, that PE is closer to 14 or 15. It's a massively profitable company, and I love some of the moves new management is making, like rolling out an ad platform, I think is a big deal. Expanding the partnership with Shopify is a big deal. And these things are not reflected in the numbers yet. I think it's a very high potential business that is being really overlooked by the market. Number 4 is EPR Properties, a real estate investment trust. Just hit a recent 52-week high, but I think it's still a buy. Could be a big interest rate winner. Pretty much higher interest rates have essentially prevented this company from growing. They have a big credit line, but they really haven't been able to tap into it because of what it would mean for their interest expense. And this could change as rates start to come down. Big opportunity to invest in experiential properties. Number 5, Ally Financial kind of fell off a cliff, dropped by like 25% in a day not that long ago. Reason is really recession fears and consumer resiliency. This is an auto lender. They spun out from General Motors years ago. It's really evolved into an impressive online bank, but because of consumer fears, people have kind of sold the stock off lately. I think that's a mistake. Trades for less than 9 times earnings. So I'll be adding to this one as well. First ETF on the list, and this one I've talked about a few times, the Vanguard Russell 2000 ETF. Possibly the largest investment I'm going to make out of these 11. I've really tried to build up my index fund exposure. That's been a focus of mine over the past year or so. I think small caps in general are a great opportunity. there's a big valuation gap. For example, the average stock on the Vanguard Russell, or the average stock in the Russell 2000 trades for about 2 times book value. The average S&P stock trades for 4.7 times book value right now. Big valuation gap between the two. I think that's going to narrow, especially as interest rates come down. Number 7 is Prologis. Ticker symbol is PLD. I think of this as one of my safety stocks. It's the biggest real estate investment trust in the world. They own distribution centers primarily. If you've ever seen one of those giant Amazon facilities, there's a good chance that Prologis is the company that owns the real estate. Good dividend and good, very stable cash flow. A lot of demand for industrial properties. Generally safe investment. Going to add to that one. Number 8 is one of my newer positions, JD.com. I really like what I'm seeing out of China economically right now. They're doing a great, we've seen some good moves. That's why JD has popped lately. Still trades for less than 8 times forward earnings. Very cheap. The company's doing a great job with capital allocation, aggressive buybacks, and there is lots of long-term potential here. Number 9, and this is going to be a small one. Nextdoor is not one of my largest positions, but it's a stock that I think the market is overlooking and really shouldn't. Ticker symbol is KIND, KIND. Their mission is to make a kinder world, so that's where that comes from. Sub $1 billion market cap. About half of that is in cash on their balance sheet. So they're not quite profitable yet, but they're definitely showing a path to profitability. Management is buying back stock because it perceives it as a big discount. Recently, the CEO stepped down, and the founder of the business came back and took over the top spot, and is really prioritizing efficiency and monetization. And the results are attractive so far. And I think this is a bargain microcap stock hiding in plain sight right here. So those are my 9 existing positions I'm adding to. New positions, Capital One Financial. This is one that I've talked about a few times. I've said I plan to buy it, but as part of my job, I need to stop talking about a stock for a few days before I can make the move, and that really hasn't happened yet. I love Capital One right now. It trades below book value. I think the Discover acquisition is very interesting and creates a lot of possibilities. Not only does it build the credit card business even higher and add a lot of complementary products to what Capital One already has, it adds an in-house payment network, which is very rare among banks. So it makes them less reliant on Visa and MasterCard. And the business itself is very profitable because of the high interest nature of the credit card business. And the low interest nature of the deposits that Capital One takes in. There's a lot of room for margin, even with a reasonable default rate. So I really like this one at the current price. So last but certainly not least is the Vanguard International High Dividend Yield ETF. This ticker symbol is VYMI. I'm an income investor. I don't rely on my portfolio for income yet. I'm in my early 40s, but will eventually. And I think dividend compounding is a great way to build wealth over time, honestly. This invests in primarily blue chip stocks that are based outside the US. And it's one that I think is a really interesting ETF to buy right now. So let me stop my share. I'd love to hear what you think about any of these. What stocks am I overlooking? Which ones do you agree with? Do you not agree with? I'll do my best to answer every question and respond to every comment individually. And thanks for listening. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.